Yes, everyone, welcome to the final video of the first part of the technical section. So pretty much in this entire section, we've gone through all the basics of smart money concepts, using order blocks, liquidity voids, types of order blocks, obviously market structure. We understood how key that is, premium discount areas, everything else that we've done. So even just using what we've learned here, you can develop your strategy however you like, whether you're on the 4 hour time frame, whether, some people have jobs and they can only trade a few times a week. So it really depends. Do you want to go down to the lower time frame, or do you want to keep using the higher time frame and using the concepts that we've just learned? So I'm going to be going through an example where take you through a case study that I've been through in the past, I think it was a few weeks ago, something like that. But yeah, so first thing to understand right now is we had this low right here. Let's just say we were in an uptrend, so it was a higher low. Then we had this higher high break above the previous highs, and some liquidity was being formed right at the bottom right there where price was right now. Moving on. When we saw this break down below this low right here and that liquidity form, we had a possible sell to reach our liquidity void. Now, personally, I would say this is a lot riskier than every trade that we're going to be looking for, because look, we're in an uptrend and we're looking for buys. However, you can always hedge against them buys by going through sells as well, because eventually, if we're expecting that price will reach this discounted area, through this void and everything like that, if we're expecting that to happen, then price has to sell to it, right? And where's it going to sell from? Possible sell to reach the liquidity void right here. So we've got this massive order block that we've just reacted off. But that's the problem of reacting off a very high time frame. Sometimes you have to go on the lower time frame. Might be the 15-minute, might be the 5-minute, and you understand there's more order blocks in there that need to get mitigated. That's exactly what happened. We entered straight off of this area right here. It was a 15-minute order block. Go down to lower time frame, it will make sense. Yeah, now we've got this sell, and where we aiming for, like I said, the void is what we use mainly for take profit. Sometimes you can enter off of them as well, mixed with a breaker block. Personally, I would always use it as a take profit. And this is what happened. So we filled this void right here. We had this massive imbalance, but the true imbalance in the whole thing, I feel like, was right here, because we've got in each of these candles right here, if you can see, just look at the screen a bit closer. Every single up candle had a wick up and down. So we had this movement going up and down, had this movement going up and down, up and down, up and down. This one right here was the area where there was simply buy movement, and that's where we aim for. So we look for buys now. When we get to that area, what have we identified? We identified this, see this white candle, that breaker block. We identified this massive black order block there as well. And what other confirmations do we have? It's in our discounted area. So the 50% you can see right there is that red line. Then between the 61.8 and the 71 retracement, is between that area right there. Some people in the smart money world, they would say this is the key zone. Personally, I use it as a zone and then look for order blocks and entries in there. If I find something good, then yes, I'll enter. Discounted price. Now, so we closed off that buy from that we closed off that sell from that last trade. Then what goes on? We entered off of this breaker block, as I said, enter right there. That's a clean, 1 to 6, 1 to 7. And why did we aim for this high? We aim for this high because firstly, with market structure, we're in a buy at the moment. We had this liquidity right here. You see that double top right there? And then this is something, as we discussed, called buy side liquidity. This is where you aim for the buys to keep on going towards, because we're in a buy side movement. Then moving on as well. As we moved up there, we had this massive push up. We could have still held a bit more, but personally, I'd like to take my profits, because at the end of the day, we're in for the long term, not for a short run. And then what happened? we entered a stage of consolidation. And what usually happens is consolidation, as I've explained before. You get a buildup of liquidity, you get a buildup of orders, liquidity on both sides of the market. So you've got it at the top and the bottom. However, structure is still bullish. So what if I was to ask you, what do you want us to do? Do you want us to sell or to buy? Of course, we're going to be looking for buys. Now, we want to either use liquidity as a run on liquidity. So it might go boom, right to the top and then go back down. Or we can use that as a take profit if price doesn't even get there. Instead, we use this liquidity at the bottom so we understand that price is most likely going to come back down there. So what we're aiming for right now is some kind of point of interest where we can enter off. Now, there were quite a few points of interest, but when you look at the fibs and everything like that, some person who was entering off just a 0.618 fib would have entered off this area right here. And okay, it would have been, there would have been valid reasoning for it. But if you remember, actually, I'm going to be getting into this into the advanced section as well. But candles that really do wick like this are called FU candles, because we're basically telling price to FU, because look, we had this massive move and then, okay, yes, would have been the perfect entry, boom, buy. No, it didn't happen. Banks caused that wick to happen, took all the stop losses of the buys that were happening there, and then went back up. Now, these FU candles are very sensitive. They're very sensitive. And that's why when I went down to the 5-minute, 15-minute, I looked at this area right here, and there was an order block inside there. And that's exactly what we entered off. Pinpoint entry, literally no drawdown, straight back up. And then if I was to ask you as well, where we aiming for take profit, simple answer. We're going to potentially, if you wanted to keep it really safe, tiny bit of profit just above this high right here to have some initial profit, but the main profit target would be this high right here. Now, depending on your fundamental directional bias, if you understand that price is, because of it's fundamentally backed, if you understand that it's still going to continue upwards, then there is no reason for you not to hold onto some profit up there, unless you've got a really good technical and valid point. But at the end of the day, one thing I teach to all my students is fundamentals by far outweighs technicals, because you might have the best technical setup in the world, but if fundamentals is going against that, you're gonna lose that 100% of the time. Because let's just say, for example, supply and demand of oil, and you're looking at a CAD pair, that's gonna have such a big influence. And if you're telling a banker, oh, this CAD JPY is gonna sell because of this technical movement, but he's got a bias where he's got buys on CAD JPY because of fundamentals, no matter how perfect your strategy might look, he's always gonna win. And at the end of the day, the banks, some of them even use support resistance lines and the most simple technical strategies, but it's the data that they go for. It's the fundamental backing that they go for. So this is one thing we need to understand. Moving on, obviously, into the fundamental section, that's much later on, but we need to clear up our technical strategy. So yeah, guys, please, like I say, go back into this section. Please take notes on everything that I've talked about so far. We're going to be getting into much further detail. I mean, even this, for example, when we refine our entries and go on the lower time frames, there's a few key things you need to understand. So yeah, anyways, guys, take care, and I hope to see you in the next section.